Hello and a very warm welcome to Sansad TV. You're watching Viewpoint with me, Frank Rausan Pereira. Well, in a major regulatory move, the Reserve Bank of India has issued a unified set of guidelines to improve accountability and customer trust in the digital lending ecosystem. Announced on May 8th, the guidelines bring focus on borrower protection, data transparency and responsible lending. The directions include two key initiatives: enhanced transparency in digital loan aggregation and the introduction of a public directory of digital lending apps or DLAs. In this edition of Viewpoint, we will analyze how to make digital lending safer. Joining me on the program today are Lokanath Panda, banking and financial expert and also COO, BLS eServices, and Siddharth Rathore, assistant professor, economics, Delhi University. Thank you to both my guests for joining me on this edition of Viewpoint. Lokanath Panda, let me start the program with you first. Let's first try and put into perspective, get an understanding and overview of the digital lending ecosystem as a whole.
See, from RBI's perspective, RBI is always encouraging innovation. At the same time, there has to be a responsible method of reaching customers and providing banking services, lending in particular, right? During this period, digital lending has become a very large phenomenon, especially backed by the fintech innovations that are happening in the country. Also, this is growing at a very fast pace, right? Because digital lending provides the kind of convenience and ease of access to the customers, and also lenders to reach out to a large number of customers in varied kind of portfolios, right? While banks themselves are focused on large portfolio of corporate lending and housing and other sectors, digital lending is helping in a way to reach out to MSMEs and small businesses and consumers in a great deal. So this ecosystem is bound to expand further, but there has to be certain guardrails put in to kind of create to alleviate kind of privacy concerns and data protection measures and stuff like that, and also increase diligence by the regulated entities, which are whether banks or NBFCs and other regulated entities within the RBI ecosystem.
Absolutely. So now let me come across to you now. Let's look at how this particular segment has really grown over the years. Digital lending wasn't even a thing, maybe a decade ago, but now at a click of a button, literally at a click of a button, you get the money in your account. How safe is it, first and foremost? How has it grown? Is there anything to be concerned or worried about?
So, Frank, I consider digital lending as a product of a three-parent child, where the parents are finance, the industry of finance, the industry of AI/ML, and Jam Trinity. See, this industry really took off after 2015 when the data rates in India got low, and almost everyone had the access to both banks and mobile phone and verification through Aadhaar. But the proliferation of this entire industry happened during COVID, and this is also the period where we had a regulatory arbitrage in the system, where there are basically two segments to this entire industry. One is the regulated entities. These regulated entities are the entities which are supervised directly by the RBI. So, for example, typical banks, your NBFCs, and all India finance corporations. But the second set of entities are lending service provider entities. Now they are the ones which are creating the problem here, because the regulated agencies and the regulated entities like the banks are giving this last mile this thing to reach out to the customer to these entities which are lending service provider entities. Now the problem is that these lending service provider entities do not have a clear-cut framework, so they fall into a shadowed region where there's a regulatory shadow. And the RBI and the government of India has been trying in the last couple of years to basically keep a track on it. Now this has happened because a number of suicides have been reported, also because of the fact that the way that the credit has reached. So if you talk about 2020 to 23 year, around 1.5 lakh crore rupee was lent through these lending apps. And the growth of this particular sector is around 27% CAGR. So with that, you can see that what kind of pace with this this particular sector is growing. And the issues further down are with respect to that, is there transparency in the system? Is the borrower aware that what are the terms of the borrowing? The financial literacy in the country is not that high. Then we have other issues like, because after COVID we have also issues like the proliferation of this fantasy games and this addiction towards debt. All of them has basically led to the increased use of these agencies. And through the regulations announced on the 8th of May, the RBI is trying to regulate and create transparency into the system so that the borrower also gets to know that who is the lender. So that is the framework with which we are bringing it. And finally, there is a talk about the convergence of the Data Privacy Act or the Data Protection Act with the lending as well, where we want that all these lenders should process their data in the country, and also what kind of access do they have of a particular person's mobile phone. So if I'm lending, if I'm taking a borrowing from a particular entity, I should not give them access to my photos, to my videos, because that leads to again harassment of the end use customer, as we have seen in the last couple of years.
Absolutely. I think two very valid points that I'd like to take forward with you, Lokanath Panda. One is, of course, lack of financial literacy in the country. How major a challenge or how big a challenge is it? Secondly, data privacy as well. We seem to be giving out our data anywhere and everywhere without even thinking, without even reading the fine print and just clicking OK and I agree. Earlier, at least, it used to be documented in the form of papers. Now it's happening digitally without even looking at anything. People just scroll down to the end, put the tick marks and then and say agree.
See, as a consumer segment in India, we were all used to kind of getting our services through an assisted mode. So somebody was there to kind of support us. Finance is not such a simple thing. Finance is a complex domain, and it requires literacy on the part of consumers. So the consumer must know, what kind of interest rate they are going to pay, what kind of periodicity of repayments, other charges, and any other terms that the lender has to provide. So there has to be transparency, and also the charges that are being levied has to be in right proportion, in the sense you have to balance it, that there is a cost of providing the service. At the same time, there should not be usuri. You shouldn't be charging exorbitantly, because that kind of then compounds and leads to other problems. So this is one area where financial literacy is very useful, and there are efforts by RBI, there are efforts by other entities to kind of create more literacy around it. The second aspect of it is end use, right? So the consumer also have to be aware that where to put it in. If you have taken the money as borrowing, there should be purpose for it, and things like fantasy games or things like any other end use which is not generating further income for you to repay the debt, you will get into a trap, right? So literacy is a big requirement, and there has to be a continuous effort, both in a digital way and also through financial literacy centers and stuff like that.
Absolutely. So financial literacy centers really are the way to go, and also to put out that information loud and clear and not really in the fine print, so that the person knows exactly what he or she is getting into. All right, Siddharth, let's take the discussion forward now. These new guidelines, you touched upon it in your opening remarks. How far does it go to try and address this issue? Because we've seen over the years as well, there have been dime a dozen lending apps that have come to the fore. Now, is there a need to curb the number of lending apps that are coming in, bring them into a framework like the RBI is trying to do at the moment, so that we know that they are really genuine and not loan sharks, if you could say that?
Yes. So it's a two-pronged effort, so to say. It's not just the RBI which is coming up with these regulations. The government of India has also taken certain steps. I'll come to it later. But through this particular set of regulations, RBI has said a couple of things. First is a key fact statement. Every loan should be accompanied by a key fact statement which should outright specify what is the amount that is being lent, what is the tenure, what are the charges, what are the repayment, what is in the end, what are you going to repay. And an extra factor that has been introduced is a comparison table, that if you take this particular loan from X, that this is what you are going to get. If you are going to take from Wise, for example, if I take it from say Bajaj Finance, if I take it from Paytm, if I take it from any other lender, what are the rates, a comparison table of sorts. So this is the first step that the RBI has talked about. The second thing is, as you said, that there were no provisions in terms of no written documents. So the RBI has said that for the first time that there has to be a digitally signed document which has to be provided to the borrower, that this is the agreement between the lender and the borrower. Then apart from that, there is also a point of cooling off period. At times what we do is in the heat of the moment we buy stuff. So to curb on that, there is provided a 1 day cooling period, that after 1 day, if you want to reflect on the borrowing, you can perhaps go and then cancel your purchase or your borrowing. Then with respect to privacy, what has happened is in the last 2-3 years, a number of borrowers have been harassed by these loan sharks, so to say, and they were basically talking to borrowers and saying that we will leak out your private information because we have access to your photos, we have access to your videos, we have access to your chats. So the RBI has said that you cannot get into all these areas until unless you have explicit permission, and if the borrower wants, then he can also come and say that I want to withdraw all these permissions that I have given to you. Then finally, also there is a talk about lending and managing of this multi-lending platforms, which provides you different forms of lending. So this is also what is being said. And all these lending apps have been given a date by 15th of June. You have to tell to the RBI that these are the apps that are there, and these are the kind of products that we are giving. And by 1st of November, all these multi-level platforms also have to comply with this regulation. Now, this is one aspect which is taken up by the RBI. The government of India has also acknowledged this particular problem, and if you remember, in December there was a talk in the Parliament with respect to a particular bill, and in January this discussion happened with respect to the Bula Act, which is basically the banning of unfair lending act. So all these activities will now be banned from the side of the government, and a 7-year imprisonment provision and a 1 crore rupee fine has also been put into this particular provisions, as well as all these harassment way of taking money has been restricted through this particular act.
Absolutely. Now, Lokanath Panda, how do we take this up a notch and go to the next level so as to ensure, precisely what Siddharth just pointed out about the level of harassment, the loan sharks and so on and so forth that people have to deal with, not just in cities, but even in rural India, the situation gets far worse. Yeah. So what more checks and balances do you think we need? What more needs to be done?
See, data privacy and information security goes a long way. It's not only the compliance, right? The lending service provider, which is the digital lender, need not have so much of information about the consumer. It has to be really need to know basis on what the limited information that has to be there. Also, banks have systems in place for data purging, to delete the information that is not required from these digital lending partners. Also, banks are putting better compliance structures, like they are appointing a chief compliance officer to monitor this on a continuous basis, audit and see the all the regulations are being followed, because the fintech may not necessarily understand the whole of RBI regulation. Banks do, the regulated entities do. So regulated entities are now kind of, through this consolidated guideline by RBI, are directed to kind of put that knowledge into practice and make the fintechs little more regulated from this perspective, right? That there is monitoring, there is compliance, and there is privacy concerns being taken care of.
Just a quick follow-up on this. Let's look at the lenders as well, and the risk factor really as far as the lenders are concerned. Like we were discussing earlier in the program, I remember in 2005 when I took out my first car loan, the documentation was this thick, the file was this thick. Now, like we see, you just click a link and then, you click a button and the money is in your account within 30 seconds or a minute or so. So what about the risk factor really as far as the lender is concerned? How is it that they are able to give out credit to such an extent? Do they feel that they can safely recover all of this?
See, with the emergence of better and faster technologies like AIML, right, you are able to underwrite the loan faster, because you have access to other alternate information, whether through an account aggregator mechanism or other mechanisms. Also with the JAM 1080 you have certain information. So banks and the digital lending applications are much more equipped today to take those decisions faster. So there is nothing wrong with that. The issue really is kind of letting the customer know that what the customer is getting into, right? Also from a bank's perspective, it is always the reputation, which is banking and financial services are a function of trust. The customer trust must be there. It has to be kind of total, right? Total trust has to be there on the system. So banks have to protect their reputation. So banks have to kind of put into practice such compliance measures going forward.
Absolutely. Okay, Siddharth, let me bring you to the picture now once again. As far as the ecosystem, broadening the scope of the discussion, looking at the digital lending apps as a whole, is there a way, do we need to do more really to rein them in? Because there have been several digital lending apps with unscrupulous backgrounds and all of that have come to the picture as well, and they too seem to be flourishing in the market. How do we put a stop to that?
So what we have seen in a couple of years, in the last 2 years, the government has taken some measures. In fact, there was an operation, if I remember correctly, it was Kavach by Google, where it removed around 600 apps last year, which were basically the scrupulous apps. But apart from that, what we also need is, this is the time of artificial intelligence, this is the time of AI agents. So RBI needs to be one step ahead of all these. In fact, Government of India needs to be one step ahead. And then there are AI agents which can be deployed, which can see that what are the kind of apps which are exploiting these loopholes, and on a real-time basis that they can provide you a feedback, and then on a real-time basis you can ban and blacklist these apps. At the same point of time, what is also needed is the regulated entities, basically the banks which are taking these the last mile lending service providers, they should also be responsible that if they are contracting a particular lending service provider, the activities should also have an implication on the bank. So if I am giving my service to a lending service provider, he should also be accountable to the bank, and the bank should also be accountable to the RBI. So there should not be any regulatory arbitrage in the entire ecosystem. That is the only way through which you can protect everyone. Apart from that, an initiative like green badges, you can have a central registry. You can just go and type about a particular app, and they can, on a real-time basis, they can have a green badge of sorts, something like you have on LinkedIn or on Instagram, where you have a blue tick, or on X, you have a blue tick. So something which shows to the lender that I'm borrowing from a verified loan giving agency and not an unverified one. So these are probably the steps. And one more perhaps I can say is that we already have access to so many bank accounts under Jan Dhan. The government can also think of an emergency line of credit into the account of 2,000 to 5,000 rupees for individuals, if they can qualify for it, if needed. So that there is that end of the day, there is some kind of cushion that can be provided to the lowest levels of the democracy, where they can have some access to funds in case of emergency, and they don't have to resort to these loan sharks or loan companies.
Absolutely, absolutely. Lokanath Panda, let's talk about another aspect as well. We touched upon it slightly, during the course of the discussion. This is the age of new age technology. This is the age of AI as well. Everything seems to be going rapidly fast with regards to AI and emerging technology. The role of technology really in dealing with the entire digital lending ecosystem. How do you see it?
There is, you can only kind of curb any unethical practices in technology through technology, right? You can't manually do it. So like there is fintech to deliver this, there is also a lot of regtech, which is regulatory technology. So basically there are solutions around putting AI into practice for KYC, better KYC compliance from a borrower perspective. There are monitoring tools, there are offline and online monitoring tools, right? So there is quite a bit of technology role in curbing these practices, right? You have to also, for banks and regulated entities, to kind of act fast on some customer grievance, right? If So it's like an SOS, right? So those also have to be deployed. So there is a lot of role for technology in this space, and this space will grow, right? Currently it is hardly a percentage of the total lending, right? So and in the country the unmet demand for credit is really high, right? So this is bound to grow. At the same time, you have to also create technical guardrails to keep it in check for best practices.
As the sector grows, Siddharth, a quick follow-up here. How do we be or preempt what may be and be proactive rather than reactive?
So the technology, unfortunately, is outpacing the regulation space. So we need to be very nimble-footed in our regulation. So if you see the RBI regulations, the last regulation came in 2022, and between 22 and 25, the industry, the AI industry has completely changed because of the large language models. So we cannot have a hiatus of 3 years. We have to be very, very nimble-footed, that every 6 months, just like we have a financial stability report coming up, we should have a regulatory report whereby if there are any rogue regulatory oversights, if there are any shadow banking, if there is area of stress that we see that is there, we can identify it and we can probably have a vaccine for that as well. At the same point of time, the extent of the problem can also be looked at not from the NPA point of view. If you see the entire banking industry, the NPA is at the lowest. The banks look at the balance sheet looks very pink, but at the same point of time, if you go to the lower strata, if you see the unsecured loans of a bank, this is where we see a rise in NPA. This is where we also see through the RBI data that the 40%, there is 40% debt to the GDP is basically our debt levels. So household debt levels is at its highest in the last 70 odd years. So these are the stress that we need to continuously review, and based on this we can have continuous regulatory moves that whether the industry is working fine or we need some kind of tweaking. So it has to be nimble-footed. It cannot be a 3-year hiatus between two regulations.
Whatever has to happen at the moment, and since it's changing so rapidly that we have to keep up with the times.
Yes.
Time to get quick closing comments from both my panelists with the best way forward and what next. Starting first with you, Lokanath Panda.
So the best way forward is that fintechs have to learn that there is a very strong regulatory entity in this country. The RBI is a very, very progressive as well as very tight regulator, right, of the regulated entities, which are banks and other entities, right. So fintechs have to learn that. At the same time, from a regulatory perspective, there has to be a fast-paced approach to mitigate risks that are coming in. The closing comment from my side is that this is a sunrise sector. This will grow. There is a very, very large requirement for credit in the country. Many sectors are opening up. People are becoming much more entrepreneurial. So you will need digital and fast-paced credit delivery, right?
Sure. And Siddharth, Rathore, close the show for us with your concluding remarks.
So I would say that we have our aim of becoming a Viksit Bharat by 2047. For the first thing that we need is access to credit. That is the benchmark, that is one of the major aspects through which we can become a developed country. But at the same point of time, the regulation should hit a sweet spot. It should not over-regulate to the extent that we scare away all the fintech companies. At the same point of time, it should not be so laid back that these fintech companies tend to exploit the hunger of credit that we have in our country. So we have to find that sweet spot. I think with the kind of regulations that we have and the introduction of the Act, I think we'll be able to hit that sweet spot. And with upcoming regulations, we have to keep us updated in the coming 15 odd years.
All right, gentlemen, we'll have to leave it at that. Thank you so much for joining me on the program and putting things into perspective for us. What's coming out of this discussion is that we need to hit a sweet spot as far as regulation is concerned. Do not over-regulate and scare away the lenders, but ensure that we create a holistic environment and an ecosystem so that everybody can thrive. Two things to be concerned about and keep an eye out for is we need to have better financial literacy, and data privacy is a big concern as well. As long as we can address that, we'll go a long way. The role of technology is also extremely crucial and important with regards to digital lending, and we can only tackle technological crimes or technological low points with technology. We need to be abreast with the times, and regulation needs to keep up pace as well. With that, it's a wrap. This is Frank Rausan Pereira signing off.
To watch more programs of Sansad TV, subscribe to our YouTube channel and don't forget to like and share them.